Hello guys, welcome to Smart Money Trading course. Hope you all doing great. In this video, I'm going to cover supply and demand. Supply and demand is a very important topic, and so first going through the basics. So what is supply and demand? Supply and demand is a fundamental concept in trading that describes the relationship between the availability of a particular asset and the desire of traders to buy or sell that asset. So now we are coming to demand. What is demand? When the need of the product or asset, that is the demand, is higher than the availability. When you go to the market and there is limited amount of product and there is a huge demand of the product, or the need of the product is very high, you say that there is a real demand of that product or asset, and what it creates is that it increases the price of the product. So as a result of that, when the need of the product is high and there are limited number of products, the buyers tend to bid for the product and the price rises up. So when there is a demand of any product, the price of the product rises. Similarly, you can also conclude that when the price of a particular product or asset rises, there is a demand of the product, and vice versa is the case for supply. When the need of the product or asset, that is the supply, is less than the availability, that means there is a lot of available product or asset in the market, but there are less number of buyers to buy it. As a result, what happens? That the price of the product decreases. So when you see a bullish trend in a stock, you may say that there is a demand of that stock. And when you see a bearish trend in that stock, you can say there is a huge supply in the stock. So these are the basics of supply and demand. So now, after seeing a chart, how can you actually detect the areas of supply and demand? These are essentially very important, because the demand zones are the zones. Place your buy orders there, and you could wait for the price to rise up. When you actually detect areas of demand, you could buy at those areas and wait for the surge in price in that stock. And when you detect proper areas of supply, you can short the stock from that area and you could ride with the market. So now, coming to the technicals, how could you actually detect areas of supply or demand zones in the market? So first, coming to demand. When the price rises up like this, what happens is that it breaks the higher highs, showing that it is in a bullish trend. So even if there is supply here and the price comes down from the supply zone, the break of structure towards the upside invalidates this supply zone, clearly identifying that there is a demand in the market. So how could you actually detect the areas, detect the demand zone? When the price comes to this zone and shoots up, breaking the structure, this is a clear demand zone. Again, for this case, you might see areas of interest here, and the price shoots up from this zone. This is a demand zone. Again, when the price comes to this zone, shoots up, you can actually detect this zone to be a demand zone. This is a common way of detecting the demand zone. The market also moves like this. Price shoots up from this demand zone, comes back to this demand zone, and again shoots up, creates liquidity like this, comes back to this demand zone, and again shoots up, again create more liquidity, comes back to this demand zone, and again shoots up. So the demand zones are the zones which causes break of structure to the upside. These areas are real demand zone when it creates break of structure to the upside. So these are proper demand zones where the traders or the banks or the institution put their buy orders and move the market to the upside. These are demand zones. It might also happen that the price moves up, consolidates like this, and then the price shoots up, again come back to this demand zone, and then shoots up again. So in this range of consolidation, it creates demand, then the price shoots up, and again the price comes back to this demand zone, again shoots up, and this way the market is clearly showing that the demand zone is valid because it creates simultaneous breakout structure to the upside. There is breakout structure here. There is breakout structure here. Same is the case for supply zone, but it is just the opposite. It is towards the downside. When the market moves like this efficiently, comes back to this supply zone, goes down, comes back to this supply zone, it is continuous and it is efficient without creating gaps or liquidity. When you see this, you could understand that these are the areas. When you see this, you could understand that these are the areas where the traders put their sell orders and move the market down. The market might also move like this, as I shown you in the demand zone. It moves down, comes to this supply zone, moves down rapidly, creates liquidity, comes back to the supply zone, and then moves down. So these are the valid supply zone. So how can you detect proper supply zone? When the market moves and it simultaneously causes breakout structure to the downside. These are valid supply zones. Similarly, the market might also move like this. The market moves down, consolidates, and then the price shoots. This is also a valid supply zone. Now for few cases, you can see that there is a shift in direction in the market, which I covered in the last section, that change of character. In those cases, there is a general shift in direction and either of the supply zone or demand zone gets invalidated. Means like this. The market moves like this, validating this supply. The market moves like this, there may be a supply zone here. The market validates this supply zone, creating breakout structure to the downside. Again validating this supply zone, creating breakout structure to the downside. Again validating this supply zone, creating breakout structure to the downside. And suddenly what happens is that it breaks these high, creating higher highs. So as a result of that, this supply zone gets invalidated. And now what comes to power is this demand zone, because this demand zone causes breakout structure to the upside. So as a result, what happens next is that the price comes back to this demand zone. The institution or banks place their buy orders here and then makes the price shoot up. So as a result of that, these supply zone sometimes get invalidated, and what happens next is that the demand zone is stronger than the supply zone, and because of that the price shoots up, invalidating this supply zone, comes back to this demand zone, validating this demand zone, and then the price rises up. So the change of character here shows that there is a shift in direction in the market and the supply zone got invalidated here, validating this demand zone. Similar is the case when there is a shift in direction to the downside. What happens? There is a demand zone here, the breakout structure validates this demand zone, again comes back to this demand zone, validating this demand zone, shoots up. Suddenly what happens? There is change of character to the downside, invalidating this demand zone, and next what happens is that it picks up sell orders from this zone and shoots down. So in this case, it validates the supply zone. It might validate this demand zone, it might validate this demand zone, but when there is change of character, it invalidates this demand zone and validates the supply zone here. So it is very important, and now I'm going to show you from live charts how supply and demand zone works and how change of character helps in invalidating either supply and demand zones and validating just the opposite of it. So now moving to live charts. Hello guys, now I'm going to show you from live charts how you could detect the supply and demand zones. So this is Supreme Industries, and from this chart I'm going to show you the highs, lows, supply and demand zones. This one is high, this one is low, the market comes down, creating this one is another higher high. Then what happens is that market consolidates a bit, and then creating another higher highs, and then comes back to this demand zone. There is a demand zone here. The market consolidates here. The market shoots up, breaking the structure, validating this demand zone, and again the market moves up like this, shoots up rapidly, comes back to this demand zone here. There is a demand zone here, as you could see. The market comes down, validating this demand zone, but fails to create another higher high. What happens next is that the market shoots down. So when the market shoots down, the higher low gets broken here, and as a result the demand zone here also gets invalidated. And then what comes next is that the supply zone here gains control. The supply zone here gains control over the market, and this causes major sells in the market. The banks or the institutions sell at these price points here and shoots the market down. And then there is a high here, there is a low here, there is a high here, and then the market consolidates. This is a valid demand zone which causes a breakout structure to the upside. This is another valid demand zone. These zones are very important. And what happens next is that this zone gets invalidated and the market fails to create further higher highs, and the market shoots down here. So this demand zone gets invalidated. What comes to power is the supply zone here. So this demand zone is no longer of any use. What comes to power is the supply zone here. So you could see a clear candle here, clear candle, and this supply zone here causes major sell in the market. So the market goes back to the supply zone. Again there is a sell in the market. The market consolidates a bit, grabs the liquidity, then shoots down, creates more liquidity here, then shoots up to this supply zone here, and again shoots down like this. So you could see here, as I've shown you, that when the market creates consolidation, grabs liquidity, this is a very valid supply zone here. Market shoots down from this supply zone, causing breakout structure to the downside. So this is a breakout structure. As there is a breakout structure to the downside, this validates this supply zone. And what happens next? You clearly see that the market is moving down, creating lower highs and lower lows. Another lower high, another lower low. So this supply zone is still valid, comes back to this supply zone, shoots down again. But what happens next is that there is a general shift in direction, and this supply zone here gets invalidated. So there is a supply zone here. The breakout structure validates this supply zone, but the next change of character here invalidates this supply zone here. And there is a change in direction of the market. And when the market reverses in direction like this, you could see that it goes on creating higher highs, comes back to this demand zone here, then again creates a bit of liquidity, comes back to this demand zone, goes up, again creates liquidity here, comes back to this demand zone, and then shoots up. Breaking this structure. Again breaking this structure. Again breaking this structures. Again creates liquidity, and then it goes on and on like this. So you could clearly see that these are the valid demand zones, as these demand zones causes breakout structure to the upside. So now you could understand how supply and demand zones are important, and how understanding the supply and demand zones in the market helps you understanding and detecting the proper valid and invalid zones or areas.